Hey everyone, Palo Alto Networks CEO made some pretty surprising comments that could have huge implications for Palo Alto stock investors and cybersecurity stock investors as well. So in this video, I'm going to share with you those latest comments and what it could mean for cybersecurity and Palo Alto Network stock investors. And please excuse my voice. I'm having a little bit of a sore throat here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Palo Alto Network CEO saying we're beginning to notice customers are facing spending fatigue in cybersecurity. This is new, as adding incremental point products is not necessarily driving a better security outcome for them. In other words, customers aren't seeing the difference between all of these different cybersecurity products and spending all this money with cybersecurity products. They continue to get hacked. There continue to be incidences. And so companies are really fatigued with cybersecurity, and that's understandable. Going on, he says the single product vendor is having challenges in articulating compelling value. They're also forced to have platformization narrative. When they are not able to convince the customers that their strategy is competitive, they are many times resorting to uneconomic pricing and putting pressure on transactions in this manner. Uneconomic pricing and putting transactions under pressure in this manner. That's a telltale sign of increasing competition. When companies are willing to offer really low prices to retain customers or gain customers, that's a bad sign for the industry. And that's why in the beginning of this video, I noted that what the CEO is saying is going to have implications for the cybersecurity industry overall, Palo Alto Networks included. Whenever competition in an industry is increasing, that's bad news for investors. That's good news for customers, because now customers are going to get better deals and better offers and better incentives. But it's going to be bad news for investors because profit margins industry-wide are going to fall as these companies begin to offer these incentives and compete with each other, right? Palo Alto Networks is going to say, well, we see you're doing that. Well, we're going to respond by doing this. And then the competitor is going to notice that, and they're going to respond by doing something else. This is highlighted in what's happening in the electric vehicle industry. Tesla started the price wars, remember, in late 2022. And what's happened to the EV industry? Tesla did the first price cut. Competitors followed with their own price cuts. Tesla responded with more price cuts. Competitors followed with their own price cuts. All throughout 2023 and now going into 2024, that price war has continued. And it's had the impact of reducing profitability industry-wide. And you've seen all the trouble that electric vehicle companies are going through. Now, it's not the same thing here with cybersecurity, and I'm not saying that's where this is heading. That's the risk that could develop if this escalates. If they don't back down, if they don't de-escalate, that's where it could head. Let's continue. The CEO saying that they intend to combat this. They're going to fight this with investing in this space and trying to accelerate the consolidation for their customers. So Palo Alto saying, look, we notice competitors are lowering prices and offering really low prices. We're going to fight that by investing ourselves. We're going to lower price as well. We're going to offer promotions. We're going to offer incentive. How do you think competitors are going to respond after seeing what they're seeing here from Palo Alto Network CEO? Are they going to back down, or are they going to further cut their price as well? That's where the trouble lies. That's where the risk is, that escalation in price war, in competition for market share. Up until this point, we had not been seeing this in cybersecurity. The industry was growing so rapidly and for such a long time, and it had such great prospects longer term, that companies didn't feel the need to compete with each other for customers because there were so many customers coming in, so many customers increasing spending. So there was so much to be had that they didn't need to compete with each other. This is a bad sign, signaling that now that growth is slowing, maybe competition will increase. Let's continue. One of the challenges of replacing multiple products simultaneously, as well as the issue around double paying while working through complex contract terms. So Palo Alto Networks is going to launch a significant number of platform offers to their customers to help drive this consolidation and platformization strategy. So they're going to start having offers. They're going to start giving deals to get customers to come over to Palo Alto Networks. If they only have one service with Palo Alto Networks, they want them to have 2 or 3 or 4. So they're going to let customers start with Palo Alto and only pay them after the obligation of their other vendors ends. So let's say they have a 12-month contract term with another vendor that they have to pay for. Palo Alto Networks will give that customer 12 months free, and then Palo Alto will only ask them to pay after that 12 months is up. So a competitive move to be sure. And how's that going to affect Palo Alto? Well, they must bear the cost of this transition through lower upfront financial outcomes, but we are convinced that these will yield amazing outcomes for us in the mid to long term. I'm not so sure about that. They're saying, like, in the near term, our profit margins will take a hit. Our costs will take a hit. Our financial outcomes will not be as strong in the near term, but longer term, they will be as these trials, as these offers and incentives end and the customers start paying for the service that Palo Alto Networks is offering. But I think what the CEO fails to discuss here is competitive response to Palo Alto Networks moves here. It never ends with the competitive move that one company implements, right? It's not going to end here with Palo Alto Networks. The competition is going to respond. How are they going to respond? If they respond by escalating the competition and offering even better terms, how will that impact Palo Alto Networks? What are the deals they're going to need to do in order to get customers, even with those friendly offers? Is that going to be enough? Do they need to add several more months to that free trial? Instead of 12 months, they need to offer 24 months free for a customer? That's 2 years of free service just to attract a customer. That's increasing your customer acquisition cost. That's going to hurt your bottom line significantly. So that's why I highlighted that this is a surprising move. It's not a good move for investors. It's good for customers. It's not good for investors. I'm going to be paying closer attention to cybersecurity companies. I've often talked about cybersecurity was one of my favorite industries to invest in because so many of the factors were in favor of my investing framework. But now with this increase in competition, that's one factor in my framework, a critical factor in my investing framework, that's now heading in the wrong direction. So I'm going to evaluate, I'm going to keep an eye on this and update my recommendations here for cybersecurity stocks as I see how this competition plays out, as I see how competitors respond to these moves by, Palo Alto Networks is one of the leaders in the industry. They're no small player. So their moves have a big impact industry-wide. So I'll make sure to keep you updated and let you know how this evolves. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.